So I ended up taking this trade this morning. It was really good, it was really decent, and it was basically similar to the trade that I took yesterday. I took that short yesterday, and as soon as price started retracing and I was in a bit of drawdown, I got emotional. Obviously, I was like, I don't want to be stopped out right now and lose money. And in doing so, I ended up overtrading in the opposite direction and adding on leverage due to me closing in a loss. And then price just ended up going my way, so I just ended up being right. So had I not have doubted myself, and then I would have been up like by another 2% um, on the 5k funded. So that's basically the exact same thing that happened this morning. I took the short, price retraced for a bit, but then I thought back to that moment where I basically doubted myself, and I was like, look, you know what, if I end up being stopped out, and then obviously I'm gonna take it as a learning curve, take it as not a loss but rather a lesson, because price can either prove you right or it can prove you wrong, but you never know when it's going to retrace or anything like that. Like, you can have a notion, you can have an idea, you can anticipate when it might due to time and price action and all of that, but the key thing is when taking a trade, especially if it's a long trade, just allow the trade to play out. Literally just allow it to play out, and also have a decent stop loss where you know that if price is going to retrace, that is most likely not going to go to that level. So obviously, if you're going to do that, you don't want to risk a lot, because if it does go to that level, you maybe put on a big stop loss so you can allow your trade to move around a bit. You still want to implement good risk management that basically supports your strategy. So let's get into why I took this trade today. So basically, I saw on the higher time frame, in this case the 1 hour, that price was basically in a sell model B setup. So how do I know this? Well, you can see that price was delivering from previous day's high, and then it created previous day's low, and ever since then it was bullish for a while, so much so it was creating bullish FEGs on the 1 hour time frame more noticeably. So after creating these bullish hourly FEGs, price created a swing in order to retrace into that bullish 1 hour FEG, but the FEG failed to displace higher. As you can see, it only ended up sweeping the highs, and then it inversed the first 1 hour bullish FEG, because there was two, and when the first 1 hour bullish FEG got inversed, it left behind a higher time frame bearish BPR, or balanced price range, on the 15-minute and 1 hour. So this is basically the 1 hour sell model B. So price basically created bullish FEGs, then it left behind a swing, obviously for price to then take and displace above that swing once trading into that bullish FEG. However, it didn't do that. It only ended up sweeping the highs, and then price ended up falling, displacing the FEG, displacing the bullish 1 hour FEG, and in doing so it left behind a 15-minute bearish BPR. So obviously this is my entry point, right? As soon as I get a sweep or a failure swing, because a liquidity sweep is also a failure swing, once I get that failure swing, and the failure swing either displaces below the swing that created it or displaces the FEG that created it, that is when I enter the trade, right? However, I didn't sell immediately once the hour bullish FEG got inversed, because there was obviously another bullish FEG on the 1 hour just below that. So instead I waited for a reaction of that second bullish 1 hour FEG, and that provided a sell model setup for me. So price traded into the second bullish 1 hour FEG, and then it actually put in a failure swing at the higher time frame bearish BPR, and then after that it started to fall, right? So scrolling down to the 5 minute now, we're going down to lower time frame. So we already have the bias, we have an idea of what price wants to do, where it wants to go. So for me, price was most likely going to go to previous day's low, because just below previous day's low there was a 4 hour bullish FEG, right? So if price is really in an uptrend, it needs to move and retrace down for a bit to sweep that liquidity before continuing higher. And I ended up being correct, because price did fall all the way to previous day's low. However, I didn't hold for that long. I took the take profit that I wanted to get my account back to break even, and then I was out to trade. So it was a really good trade. But anyway, so scrolling down to the lower time frames, the 5 minute, price opened a new 4 hour candle at 7 a.m, 2 hours before London open, and it created a liquidity low. A liquidity low is just basically a low to be taken, right? However, this liquidity low literally made equal lows at my entry point. So my entry point, remember, once price created that failure swing at the 15-minute bearish BPR level, I then want to enter once that failure swing displaces below that swing low that price created once it tapped into the second bullish 1 hour FEG, right? So when price opened on the 4 hour, instead of displacing below that to give me that entry, it ended up not even sweeping. This was fine for me because a relatively equal lows. I didn't want price, and this was fine for me because trade lower. I wanted price to give me that bullish retrace, so that it leaves behind an FEG, a bullish FEG, so that I can look for an entry once that bullish FEG then gets disrespected and inversed, continuing lower and taking that said liquidity low, right? So after creating the bearish liquidity low on the 4 hour, price retraced up with momentum, creating that 5-minute bullish FEG all the way up to a 15-minute bearish FEG, which was good for me, because this is when I look for an entry. Because when we have two conflicting FEGs, it's basically showing us which side of the market has more control. Is there more buying power or is there more selling power, right? So once price created that liquidity low on the 4 hour, it retraced up, leaving behind a bullish 5-minute FEG and trading into that 15-minute bearish FEG level. And then this is when I started looking for a setup. So looking for the setup, when I'm looking for shorts, I want to see buy side swept followed by reversal signatures, such as a bullish FEG getting inversed. And when I want to buy, I want to see sell side swept followed by reversal signatures like a bearish FEG getting inversed, right? And when price traded into the 15-minute bearish FEG, it left behind that 5-minute bullish FEG. So I then scrolled down to the 1 minute and I saw a sell model A setup. However, I only consider a sell model A setup valid when I get a reaction out of an FEG before it gets inversed, right? So if I don't get a reaction, like in this case, which I didn't, when price returns to that IFEG area or the swing area where the FEG got displaced, where most would enter, I anticipate price to return there and use that as an area of support, or an area of resistance in this case. But since I was on the lower time frames, I didn't enter immediately once the failure swing displaced below the swing that created it. So instead, I waited for the 5-minute bullish FEG to get displaced, which validated the 1-minute sell model A setup. But thankfully, I actually entered early because price displaced below the swing that put in that failure swing, and it also displaced below the bullish 5-minute FEG, giving me that IFEG in one minute candle. So that's really good. So that's when I entered, and then after that, price then fell and it started retracing to respect a 5-minute bearish PPR, which got traded into before falling all the way to my take profit area. So this is when I actually, got a bit emotional and got a bit nervous because I saw price going my way for a bit and then it started retracing. So I knew that there was 2 5-minute bearish FEGs above my entry, and I knew that there was a bearish PPR level there as well, which does make it more likely for the trade to play out. However, obviously I was still kind of nervous or kind of skeptical because I did add a lot of size onto this trade so that I can get back to break even in one trade. And also I was skeptical because technically price was still in that 1 hour second bullish FEG, it still hadn't displaced it yet on the lower time frames like the 5-minute and all of that. And I was also skeptical because I was like, what if price just displaced below a low and it just ended up being a liquidity sweep on the higher time frame, and that retracement that started happening, like what if that was the real move? So I started doubting and getting emotional and all that, and then I was like, you know what, clearly if price retraces and it doesn't respect that bearish 5-minute BPR level, and then I was wrong. It is what it is. I will learn from the trade. And I honestly thought that I was most likely going to be wrong, but as you can see, price returned to that bearish BPR level and immediately it started falling after that. So that's really great. I'm really proud of that trade, and I'm proud that even though I got emotional, I didn't doubt myself and I trusted my model and I trusted the setup. So all in all, it was a good trade. I'm super glad that I'm back to break even because previous day yesterday I was down 2% on the funded, which isn't good considering that literally before that I was up 2%. So I'm glad that I'm at break even again.